Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, we'd like to have a look at our W3 or Wave 3 trade setup that's just unfolded on a slightly longer term 15-minute chart of the NQ. Combining in with that, we'd like to show you how that falls in with the large degree trend direction on the higher time frame chart. But as usual, we have to start with our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades were actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all trade decisions are your own responsibility, and no matter what trading approach you have, there always will be losing trades. That's just a fact of trading life, there always will be losses no matter what trading approach you take. Right, so I want to have a look at an NQ chart and follow up on a resistance zone we were looking at in our customer only training webinar yesterday. So for this, it's a 15-minute chart. I'll be looking at this TS3W3 trade setup here in a minute, but as usual for our MTPredictor analysis, we understand that markets are random half the time. In other words, they're in a position where you can't really get a good trend direction. But at other times, or the other half, they are basically in a clearer position, and that's the time where we want to look to do our analysis. So how do we decide whether they're in a clearer position? Well, for this we go to a higher time frame chart. So if you're trading on a 15-minute chart, you'd go out to the hourly. If you're say trading on a daily, you'd go out to the weekly. If you're say trading on a weekly, say a 3-minute chart, you'd go out to the 15-minute. So for this, we actually had a look at our DP off that last major pivot back here, and this was in our customer only training webinar yesterday. So what we did is hovered over this pivot, right mouse click, then do decision point. Sorry, missed that, and that gave an area of resistance. That resistance was on the chart in advance. It's been there for quite a while, and we're saying that we were looking for the NQ to potentially make a high in that particular area. Now let's have a look and see what happened. As you can see, the market's gone up into that zone, made a high, and then come back down again. So what happened after that? Well, if we go down to the shorter time frame, the 15-minute, you can see here was our resistance at our higher time frame DP resistance zone. The market then declined down. It then made an ABC correction back into this area here. This would be what we call a W3 or Wave 3 trade setup, because we're looking at this as if this were a Wave 2. In Elliott wave terms, a Wave 2 is the end of the first correction in a new swing just before you get a strong Wave 3 move, and that's exactly what's unfolding at the moment. We use our Elliott wave analysis in isolation. This is because, as I said earlier, markets are random half the time, therefore we don't look to try and place Elliott wave counts on our chart all of the time. We start our sequence when the market starts to come into a clear picture. In this case it would have been here, where the market made a reversal in the higher time frame resistance. So the initial move down would be Wave 1. You then had an ABC correction into Wave 2. And if I use our training mode, I could jump back to here to see what the trade setup would have been like. There was our initial trade setup. So if I right mouse click over this red cell bar, I then do analysis, this would have given us our trade setup. We keep our risk under control by using position sizing, in this case risking less than 2% of a sample $20,000 account. That will allow us to then go short 2 contracts. Can you see our target, or our initial target, would be the typical Wave 3 WPT, because we're anticipating this as a Wave 2 and therefore we're looking to trade this as a Wave 3. We like Wave 3s because typically they're the strongest and longest in a completed 5-wave sequence, therefore typically have the largest profit in relation to the smallest initial risk. Remember, losses can and will and do unfold, so when the losses do come through, and they will, the losses are kept small at one risk unit, but this is a trade we like because when the profits come through they're large, but not large just in dollars, but large in relation to the initial risk or losses when they happen. So if I turn training mode off, let's see what's happened. Well, the market has gone down, a bit of a bump on the way up there, but needless to say it carried on down and has now reached the first target where a profit of approximately 20 times the initial risk was available. So that was a really, really nice trade setup. If you're more aggressive, you might want to go out to the higher time frame chart again and place the DP off this low, because this is the last swing into the high. So we right mouse click, we do decision point, this will be the next area of our support. So if I go back to the 15-minute chart, You can see it hasn't quite reached that yet. So if you're a more aggressive trader, you may want to try and run this down into the higher time frame support zone. You can see it hasn't got there yet. If it did, then the profit would be approximately 30 times the initial risk. You're an absolutely massive trade. If you're more conservative, you'd want to come out at your normal wave 3 target, which is the typical wave 3 WPT, and that would be a lovely profit of 20 times the initial risk. So either way, a very good trade and a good example of our W3 trade setup. If you were a bit worried by this correction here, let's have a look at the ES. The ES was slightly smoother, and you can see there's the same analysis on the ES, where there's our W3 trade setup. Our MTP trend was red. It went down into the typical wave 3 WPT with only a smaller correction there for a 11.5 hour profit. There was also another opportunity to get short as a TS1 sell there, so that was unfolding at the same time. And if we look at the YM, pretty similar situation. There's the same W3 sell setup on a red MTP trend, and that went down into a slightly smaller profit, which would have had you out before that little correction for 6.5 or 6.7 hour profit. So either way, all three markets had the same kind of setups that would have got you short before that sharp fall. By the way, if you wanted to check the MTP trend color at that point there, if I put the cursor on there, you can see the MTP trend was actually grey. So that was showing you the market was in the process of making a reversal to help confirm that you would be able to take that short trade. So a good example of our W3 or wave 3 trade setup that's just unfolded on basically all three USE minis, the NQ, the ES and the YM.